We are now live, so hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your Money Show host for this session. We do have our panelists here in the Zoom room ready to begin this stock picking panel on time at 4:40 p.m. Eastern Time. That's coming up again in just a few short minutes, so thank you all so much for your patience, and I hope you're enjoying the show so far. For those of you just joining us, hello and welcome. We still have a couple of minutes to go, but we'll be starting on time for the stock picking panel at 4:40 p.m. Eastern Time. Thank you so much for your patience. Hello, everyone, and welcome to this stock picking panel discussion. Your moderator today will be Money Show's editor in chief, Mike Larson. He's joined by panelists Louis Navellier, Paul Meeks, and Philip McKellar. Now, to our live viewers, please share any questions you have throughout this session in the chat box. And with that all said, Mike, I will hand the mic on over to you.
Great. Thank you, Charlotte. And thank you, everyone, for joining us here. We're at the final session of day one. And of course, we're going to really close things out strong by having a great stock picking panel. You've heard some big picture outlooks, macro takes, other things throughout the course of the day. And now we're going to get down to the nitty gritty and talk about individual names and why our various speakers like them. You've probably seen some of them before, maybe at a Money Show virtual event, live event, or what have you. But I do want to go around the table in case you're a first time viewer or first time listener. First, we have Louis Navellier. Louis is one of Wall Street's renowned growth investment advisors. He's founder and chairman of Navellier and Associates, the money management firm. He specializes in behavioral finance and uses extensive quantitative and fundamental analysis to identify market-beating stocks. Perhaps you also subscribe to one of the several investing newsletters he publishes. Welcome to the table, Louis.
Thank you.
Then we also have Paul Meeks. Paul is one of the best known, most widely followed tech investors. He's been a street equity analyst, portfolio manager, research director, and CIO at marquee firms since the 1980s. His day job now is as head of tech research for Freedom Capital Markets, a global investment bank. Paul, welcome to the event.
Thank you, sir. Happy to be here.
And some of you who are watching now may have just seen Paul a little bit earlier today, but just in case, we're going to let him in just a minute share a pretty impressive slide on what's going on big picture and talk about his names. But before we get to that, I do want to introduce our final speaker, Philip McKellar. He's an analyst, portfolio manager, and investor at Contra the Herd Investment Newsletter. Phil has been with the company since 2011 and has been investing himself since 2004. He likes to talk about contrarian and value-oriented investment opportunities traded in the US and Canada. Phil, welcome to you as well.
Thank you for having me.
Yeah, great. Again, like I said, I want to kind of, not focus too much on the macro and the big picture, but we do have to sort of set the table here. I guess we're almost at dinner time, so I'll use the set the table analogy. Louis, why don't you talk about what you're seeing big picture in the markets, and then we'll just kind of go around the table from there.
Well, probably the biggest news is the analyst earnings revisions in the last month have been the strongest in 5 years. So as we get ready for this earnings announcement season to really get up to speed, we've already had an incredible surge in most of the tech stocks, and I'm kind of numb because I didn't expect to rally this much before the actual earnings. So this is very exciting. We do own Taiwan Semi, which did announce recently and kind of set the tone for everything. But if I'm just this year is going to be a phenomenal year because the earnings keep getting stronger and stronger every quarter I look. And you look around the world and there's a lot of problems, but hey, the U.S. is an oasis. We're food and energy independent. All the oil tankers are going to the Gulf of America to fill up, and so whatever problems the rest of the world have, they're not here. So and it's just time to grow and prosper, and I'm expecting 5% GDP growth this year.
Yeah, thanks, Louis. Paul, I guess I go to you next. Obviously, focus on tech and what's going on in that specific sector and AI in particular as well. But big picture, what do you see here? Where do you think things stand? We've got plenty of headlines driving, pushing the markets all over. But in the technology space, strength in semiconductors recently, strength in earnings, as Louis highlighted. So yeah, how would you set the table?
So I concur with Louis. According to S&P's own estimates, operating EPS this year up 17%, which is a nice acceleration, trading at about 23 times. And so that's a PEG ratio of about 1.34 times premium, but that's actually very reasonable, very where it has traded in the past. So you have a reasonable absolute PE. You have a reasonable PEG, which I watch more closely. The tech stocks have been on a run, so I also am a little bit hesitant to continue to buy ahead of earnings. There are some stocks that I like. We did have a change in the AI infrastructure narrative late in 25 that extended into 26 that was pretty negative, with people saying you're never going to get the ROI that's necessary for all these hundreds of billions of investments. Now I think people are starting to turn the other direction, and I'm bullish on a AI infrastructure building theme that is longer and stronger than some people expect. I just gave a presentation here on the Money Show about that. So I find some interesting plays in tech, but they are pretty few and far between because Louis hit the nail on the head. Some of these stocks have gone up, and there is some risk at these quarterly reports, but doesn't seem to be reflected in any stock prices recently.
Yeah, thanks, Paul. Phil, I'm going to pivot to you now here. Obviously, again, you kind of have a value-based bent. You're looking for some contrarian ideas, and that's why we like to have these roundtables where we've got people who have different approaches to the markets and equally valid ones. So why don't you talk a little bit about what you're seeing big picture and kind of what might be attractive from where you sit?
Well, a lot's changed in the past month, as both the prior commentators have pointed out. It has been such an aggressive rally the past 3, 4 weeks. I would say last month I was doing a lot of buying. We've done 10 buys so far this year, 8 of which were in March, and we were really, really buying heavily at the end of the month. In a whole variety of things. And we expected to continue buying in April. We actually thought it would continue to go down and we just continue plugging away and buying things. But of course, that didn't happen. So my take right now is we're somewhere in between. Last month I was quite bullish, and now I'm neither bullish nor bearish. It's in a zone where I haven't done any trading the past few weeks because I'm just waiting to see what the market does next. There have been some very good comments just a moment ago about why I could be bullish. But then if something really goes wrong in these negotiations, then the markets could sell off again. So from my point of view, for now, we're just waiting and seeing what happens next.
Got it. Thank you. Well, some of the people watching this may have already seen it. You guys might have seen it on your phones. I see that Trump has now said he's going to extend the ceasefire indefinitely at the request of the Pakistanis and so on until the Iranians can figure out who they're going to actually negotiate and what kind of proposal they're going to come up with. So it's a punt, essentially, again, late today. So with that out of the way, again, like I said, I don't want to get bogged down too macro. And I'm going to go back to you, Paul, because you have that great chart that you were sharing off camera, and I'd love for our viewers to see it. This sort of sets the stage on what's going on in the tech space, big picture. So why don't you grab the screen share and throw that up and talk about what it shows?
All right. Does everybody see that?
Yeah, we sure do.
Yeah. So as I told you before, that a couple of years ago, if you announced that you were doing a deal with OpenAI, you were seeing like the second coming of Christ. And then what happened as we got into late last year, a relationship with OpenAI was seen as taboo, right? They're never going to be able to raise enough money. And they have these trillion-dollar plus AI infrastructure building plans that they'll never be able to complete. However, I've always been of the belief that this is different. And I ran a big tech fund, one of the biggest on the planet, when the internet bubble popped.
Yeah.
And so I've seen bubbles. But I put together this chart. I've looked at the demand factors and the supply factors. And what I'm concluding is that, frankly, I'm more worried about supply because sometimes building these data centers has to do with old school construction projects. But I don't see a problem with demand and supply really even coming back into balance until we get to 28 or 29. And so I think we have a nice runway for a couple of years. Of course, it's going to end badly. It always does. But I think we have a nice runway you see here with demand and supply, the gap actually increasing the next couple of years. We get into 28, 29, that might be a different story. But I'm of the belief that AI infrastructure build longer and stronger than people expect. I've been adamant about that. And I think people are coming back to this theme as they got away from it in 25. Now they're coming back. That has been some of the run up in some of these stocks. But I still like very few software companies because I'm worried about them being disintermediated by AI. But I publish on AI infrastructure companies. I like the neo clouds, companies like CoreWeave and Nebius and Applied Digital and IREN. And I still like some of the hyperscalers. particularly Meta and Google at these levels, and the semiconductor companies, right? Louis mentioned Taiwan Semi reported the other day. I think even after analysts raised their numbers for TSM, they're still way too low, both revenue and EPS. And so I like TSM. I like NVIDIA. I like Broadcom. I like Marvell. I like Micron. I still actually think, even after these runs, that they have nice upside.
Okay.
And so, yes, this is my theme, and I'm sticking with it.
Fair enough. Why don't we zero in on a couple of your favorite ideas in the sector? You did throw a lot of names and tickers out there, and I know Meta on the hyperscaler side was kind of one of the ones that you've talked about as maybe being a top pick. And in the semi space, you talked about Taiwan, but also NVIDIA is another name there. So what about those particular stocks really stands out to you?
Yeah, so I'll focus on, I think, my best ideas, even though it's same old, same old. I do like NVIDIA and TSM. So TSM, I see upside. After they reported their quarter, their revenue estimate on the street went to about 35%. It started the year at about 25. And I think it's actually going to be much higher because they've guided for a sequential growth of 10%. So we're getting pretty close to a 50% annualized rate there. Um, and here is Taiwan and NVIDIA both trading at 23 times. NVIDIA is going to grow its EPS this year, and it may be low, 75%. Taiwan Semi is going to grow 45%.
Yep.
And the S&P essentially trades only one PE turn less for 17% growth, which is great. But I don't think over the long term, the S&P 500 is a 17% secular earnings grower. And so the reason that you wouldn't invest in these stocks, because they've had no multiple expansion, it's all been based on the goods, is that you think that NVIDIA goes from 75% growth this year to it doesn't slow down, it implodes. And I don't see that happen until we get the demand supply balance, and that's 28, 29. And so, man, this stock looks like it's finally breaking out. It had been trapped in a range of about 195, 200 ever since July of 25. Looks like it's breaking out now.
Yeah.
But, think about it. If NVIDIA is trading at a 0.3 peg and the S&P is trading at a 1.3 peg, what would you rather earn? And so I would say that those two, Taiwan Semi and NVIDIA, even though I like stocks in other industries in the tech sector, are probably my two best picks.
Okay, sounds good. Louis, going to you. Anything else you'd add maybe on the TSM bull case, or is there something else in the sort of same realm in this tech and in AI, either on the supply side or demand side or spend side, that you particularly like here?
Well, first of all, TSM did say they'd have at least 30% sales growth each month this year, and they announced monthly sales, and they've been blowing that out of the park. So that's why we're all so excited about it. Obviously, they make the high-end GPUs for NVIDIA, the Apple chips in their laptops, the Microsoft Surface laptops. Those chips are all come from TSM. But there, as we build out the AI infrastructure, and the order backlogs are ridiculous, what's happened is that you do get supply bottlenecks. So the most recent bottlenecks has been in memory and storage. So that would fuel, the Microns and the Seagate technologies. There's a lot more than that. There's SanDisk and Western Digital, but we own Micron and Seagate. I would add that Micron sales are supposed to be up 258% this quarter. Right after that, Supermicro sales are supposed to be 171%. I've stayed with Supermicro despite all the gyrations. I'm still up 500%, and I got in real early. I'm too cheap to pay the taxes. But they did have a very brilliant engineer who got indicted, and he's left the company. And so now hopefully all those distractions are gone, and they are 9% of NVIDIA's sales. I have friends in the cloud computing business. They make the best water-cooled rack systems. We all know all the companies building the data centers. A good example is Comfort Systems. They're just an HVAC company, but you got to cool them. We have Bloom Energy, we have GE Vernova. Bloom Energy is fuel cells, GE Vernova is the turbines. I was talking to somebody in Midland, Texas today about all the data centers going down there, and of course they don't have electricity, so they'll just hook up straight to natural gas lines and generate their own power. The other comment I'd have about and I've written all these articles on NVIDIA should be held to the end of the decade. They got right now. There's the Vera Rubin chips coming out. It's going to replace the Blackwell. It's more energy efficient and it's faster. And there'll be another chip in 2028. And then after that, NVIDIA really can't make the chips faster. They're approaching the atomic level in the circuit board. So they are trying to lead quantum computing, and so we'll see if they can dominate that. But NVIDIA is a safe hold to the end of the decade. I have it at 15 times forecasted earnings. Micron, 6.5 times forecast earnings. Memory has always been cyclical. So there's not a lot of high P's we have to pay right now when we look out. So it looks awfully good.
Appreciate that. And I'm going to pivot to Phil, but before I do, I want to ask, in a session earlier today, somebody pointed out from a technical standpoint, it's not just tech that's been extremely strong, things like semiconductors. I mean, the transports have been absolutely on fire the last last couple of weeks. And I'm wondering, is there anything non-tech that your numbers, your data is showing, hey, this other part of the world, whether it's transport or something else, is also looking pretty solid from your standpoint?
I just did a video. It'll be on YouTube tomorrow on Navler Market Buzz on 4 oil tanker stocks we own and all their forecasted sales and earnings. They're obviously taking advantage of the situation right now, the bottlenecks.
Yeah, okay, fair enough. Phil, moving over to you, we've heard about Neo Clouds and some of those companies here, but you've got a different kind of Neo company that has done well and that is maybe an interesting play in the rare earth and magnet space. Some of these metals, the countries, whether it's the US or China or whomever, really trying to secure this supply and, so that you have the ability to keep your industries, things like defense and so on running. What's the story there and what do you like about that name?
So Neo Performance Materials is the company in question. It's a TSX listed company here in Canada, and they're one of the few companies that have expertise in refining, separating, and manufacturing rare earth magnets and rare earth materials. So that, to me, when we first bought it, was really, really interesting because they were not trading like there was a problem. They were really beaten up and really contrary. So we bought them in 2024, and we paid $7 and change for it. It was a top pick of mine last year in the Money Show contest, and it's done well so far this year. It's up about 43% year to date. I remain bullish. I don't have it as a top pick this year. Maybe I should, but I don't. I remain quite bullish because the guidance is good, and they have 3 expansion projects which have just all completed. 2 of them are outside China, and it's one of those things where it's very hard to see a way through it unless they're involved in building out the infrastructure for countries outside of China to start fighting back against China's rare earth dominance. And I mean, in the United States, they've certainly woken up to that, but they're waking up to that in Europe and elsewhere too, because it's just such an important input into, as you mentioned, defense applications, data centers, EVs, everything. So yeah, I'm still quite bullish on that name, and I think so far the efforts of Western governments have really been on securing supply and looking at mining. The irony with that is that's where China has the least dominant position.
Yeah.
There's plenty of mines outside of China. There's plenty of supply outside of China. Where China really excels is in the manufacturing, is in the separating, is in the refining. So at some point, I think governments will do the second step of the thought process, which is where's the actual real bottleneck? And when they do, I imagine that Neo will be quite a beneficiary of those trends, and I'm quite bullish on it as a result.
Okay. I want to stick with you and ask about another one of your companies because a few of your names, again, they're companies people may not have heard of. They're a little bit off the beaten path, but obviously that's what we're looking for as a value or a contrarian investor. It was Ceragon Networks, if I'm pronouncing it correctly. What's their story?
Yeah, I've heard it pronounced 2 ways, so that's perfectly fine by me. Ceragon Networks is is a top pick for the Money Show this year. So I wrote about it in January or December, I guess. This is a small Israeli tech company, and they do most of their business in India and in the United States. In India, the play is 5G and India's 5G adoption. And they are really well situated to satiate that demand for 5G adoption in India. So that's one pillar of the thesis. The other is building out private networks, mainly in North America. And the private networks, they could be governments or companies or large users that just want their own network. And they're also well situated for that. They've done some acquisitions to leverage that and really excel in that specific niche of the market. And we bought them in 2022. We had them as a top pick for the Globe and Mail in 2024, and they did exceptionally well. We sold half of it in early 2025 for a good gain, but then it fell because there have been some credit issues, or there were last summer some credit issues for large Indian customers. So that's a risk that is slowly working its way through the system. And I anticipate in the year ahead that things will continue to progress operationally for them, and the market will come to terms with the risks in India and those risks dissipating over time.
Perfect. Paul, I want to go back to you. It's interesting. One of your picks is AppLovin, which I was just reading a technical analysis. I mean, it got swept up in sort of the software-driven sell-off. From a technical standpoint, somebody noted it looks like on the secondary sell-off, it was on low volume. It looks like it might be carving out a double bottom. So that's the technical standpoint. But what do you like in terms of the fundamentals on that name?
So I'm a contrarian on this name, though I bought it far below where it is. But this stock is, run up to 750, $800 a share at one time. They were or are the dominant player in helping mobile game app developers advertise and get customers. But they're taking their show on the road, and they've been very successful so far, now supporting a much broader array of customers in e-commerce. And so I think there is big upside. One of the things that's happened is about a year ago, a number of short sellers jumped on this thing.
Yeah.
And here we are. It's a year later, and I know the SEC has followed up with an investigation. We haven't got any feedback yet, so that's always a cloud over the company. Now, it's not based on financial accounting fraud, which usually freaks me out the most, but it's based on, these guys are deceptive advertisers, getting you to click on things you shouldn't be clicking on. But the way I look at this is we're now a year into the investigation, and the SEC also has been looking, and they haven't come back. And I don't know, will it ever be resolved? Or maybe they're found guilty by the SEC for something minor so both sides can save face. But I don't think anything that happens disrupts their business model. And in the meantime, fabulous fundamentals, rock star margins, even better than Meta and Google at their heyday. And now stepping into a very big market. And, their tools are AI enabled. AI boosters. And so I don't think this should be swept up like a ERP software company with, these guys are going to be taken to the woodshed by AI. So I think they're going to have another great quarter, continue with great guidance. I don't know when this other stuff is going to be resolved, and it does scare me, but I think it ends up being, a minor violation, if any at all. And people will say, okay, that's behind us. It wasn't like a, deal killing company. We'll see. But anyway, I do like AppLovin. It's fundamentally, it's a wonderful business model.
Perfect. We do have a couple questions that have been coming in, so I want to get to them and just remind anybody who has not submitted a question, if you're watching this, we want to be interactive. We've got these panelists here that are happy to take your questions, so do type them in the chat window, and Charlotte will communicate them to me. Phil, this is an easy one. Jeff Peak actually asked if you could repeat the names of the companies you mentioned a minute ago. And I would also say if you can give both the Canadian tickers and or how somebody would trade it if they want the US alternative for Ceragon and for NEO.
Yeah, so NEO Performance is listed on the TSX, and its symbol is NEO. So very straightforward there. And then Ceragon Networks is listed on the NASDAQ, and it's CRNT.
Perfect. Okay, thank you. Thank you, Phil. And Louis, this question would be from you. Eddie Foon actually, or he says he's asking everybody, but I know you mentioned it specifically. And his question is very simple: is SMCI still a buy?
Well, I rank stocks and it's a hold on my rating system, but I told everybody to buy it the other day, and I think that's in the video that's coming out tomorrow morning. But the reason it's a buy, it's the sales are supposed to be up 171%, and it trades at less than 10 times forecasted earnings, and I think it could easily get bought out. I think now that the one guy that the reason the one of its founders got indicted, the government said he sold some of the fancy NVIDIA servers to China via a shell company in Taiwan. Whether that's true or not, I don't know. But anyway, the guy's gone. There's no cloud over the company anymore. So let's just enjoy this incredible order backlog that's going to have record sales and earnings for Supermicro. Oh, and I should add, Vertiv is announcing tomorrow morning. They're one of the Supermicro competitors. Supermicro makes the best water cooled rack systems, but Vertiv does the same thing. That's VRT.
Paul, do you
Hey,
have
Mike,
anything that you add? I mean, I don't know.
may I just, I admire the hell out of Louis, but I would tell you, I worry about SMCI because, you do have a company that not once, but twice, even before this issue, have been bagged for financial accounting.
Mm-hmm.
And the CFO typically takes the fall, but you know who's the behind all this? And the guy that's an immovable object is Charles Yang, their CEO and founder.
Mm-hmm.
And I would be very surprised if he wasn't at least knowledgeable about this latest fiasco. And so I just don't trust the guys. Like I said with AppLovin, they have been criticized by short sellers for deceptive advertising. These guys several times have spooked me with financial accounting fraud. And so maybe they're sold, but I think if Charles Lang wants to boost his net worth, he probably should sell, because I think, it's a gang of thieves over there.
I think the biggest problem with a lot of the build out is just the order backlogs are so massive. And you're at one time you were talking almost 5-year order backlogs, and I think we're down 3+ years now. So and the question is, how do you do the accounting? And of course, all the criticism was, are you booking your order backlogs right? One thing I will say in SMCI's defense, I didn't see any analysts slashing estimates when all the accusations came out. Of course, the original hedge fund that went after them is no longer in business. So, I did corporate accounting. It satisfied my smell test. But yeah, there's no doubt that they're brilliant engineers, but they're not good at PR and they're not good at accounting.
Fair enough. Another question came in, and this is kind of interesting because I know each of you approaches the markets in a different way and with what you do and what your firm does. But Rusty's asking, besides where their firms might be placing their bets, what stocks are the panelists putting in their own portfolios? I know, Louis, obviously you disclose things that when it's owned in your name or the firm name. Phil, I'm not sure if you're, when it comes to the contra the herd recommendations, if, those are things you're buying right alongside subscribers. So just to, I guess, answer that question, anything you guys want to throw out there, maybe starting with you, Louis?
Well, everything I've talked about, I own. So I don't own Western Digital. I mentioned that there was a memory stock, but everything else I've talked about, I own. But I own over 80 stocks. About 45% of my portfolio is predominantly data center related. Obviously, we have AI appliers like AppLovin and Palantir. We have, we think NVIDIA is a monopoly, and we're very happy sticking with its monopoly. I'm finding more stocks. It's been very narrow, but I think probably the oddest thing I have is I do own over 20 gold stocks, and these are gold miners that are going to have record sales and earnings for the next 3 quarters, because the central banks are buying a lot of gold out there. In fact, they own more gold than treasuries. And it's interesting, when the yield curve gets all screwed up, it can screw up the central bank. And that happened in France, and they had some losses on their their yield curve management. So they had to use their gold profits to offset their losses. A lot of people don't remember when Janet Yellen was our Treasury Secretary, she lost control of our yield curve. And we had this inverted Treasury curve. And if you bought TLT, which is an iShares 20-year Treasury ETF, it dropped almost 50% thanks to Janet Yellen. And now Scott Bessett's got better control of the curve. He's wrangled it. The curve is normal. His buddy is this Kevin Hassett, he's in front of the Senate today. So hopefully we'll be able to get control of this stuff. But we are going to have to lower rates because the interest burden is pretty bad right now.
Okay. Phil, same question to you again. Like I said, I'm not sure kind of what your policy is there, but it's a question that somebody asked, so I figured I'd pose it to you as well.
Yeah. Everything that is in the Contra portfolio, I own myself. And in my personal portfolio, I have one stock that isn't in Contra's portfolio, and it's tiny. It's a tender offer, and I expect it will exit the portfolio in the next week. So, with the exception of very odd little blips, it's 100% invested alongside what we do at Contra, and that's the way we want to keep it.
Perfect. Paul, same to you. I mean, I know everybody's got sort of a different structure, so.
Yeah, unfortunately, I had to give up my tech portfolio management book. I'm a sell side analyst.
Yeah.
And it kind of sucks because that's all I know and it's all I've done for about 35 years now, but I can't really invest in it because I also write a newsletter and I talk more broadly about tech. So I'm not just hamstrung by this I cover, but also the ones I talk about more broadly on TV. I will tell you, I do like the gold play, and I do have it's a penny stock, but Phil may love this one, but it's a company called Blue Lagoon up in Canada. It's a emerging gold miner, BLAGF. It actually trades in the States, so I do own that. I would say among my covered names, the one I'm most interested in now, if I could buy it, is probably Applied Digital, APLD. It's a colo company that if you compare its valuation like you should to Digital Realty and Equinix, it has a big upside. And frankly, I can't recommend my other ones because my other ones are now almost all price targets have, blown by what I have. But anyway, Applied Digital, APLD, in my AI infrastructure ecosystem probably would be my favorite. Yeah.
Got it. I've got to ask, because Louis mentioned the name, and I know a lot of our subscribers at our events talk about it. It's certainly in the news a lot, and that's Palantir. What are your thoughts on obviously one of the best performers last year, went through a pullback? Where do things stand now, both from sort of the stock perspective and the underlying business perspective?
Well, Trump was on CNBC, I think today, and they were talking about Anthropic stealing some business from Palantir, and then Trump said, no, actually, we took it away from Anthropic and gave it back to, who he didn't name the Palantir, but I assume he gave it to Alex Karp. I think an easy way for investors to get rich is just bet on a billionaire. And I've chosen to bet on Jensen Huang of NVIDIA. I've chosen to bet on Alex Karp. And of course, Peter Thiel is behind Alex Karp and Palantir. Peter Thiel said it best. He says when he finds a company or seeds a company, he doesn't want to compete. He wants a monopoly. He wants to dominate. And we do have legal monopolies in America. Okay. And obviously the Biden administration tried to break up Google. That was Lida Khan, the former head of the FTC. She's now the genius behind Mandami, just so you know, that's her new job. And there's this big fight in America. Europe is all open source software, so is Canada, so is Mexico. When things are open source, the governments can spy on you 24/7. So if you tweet the wrong thing, you get to go to jail. Anyway, the tech companies in America want to be closed source. They don't want to be open source. So, the guy that pioneered the Digital Services Act in Europe, him and his team are actually banned from visiting America. And I just find it amusing that the tech companies all ran to Trump for protection. So he's giving them protection at this moment.
Yeah. Well, I forget, was it in the Hollywood event where Trump reiterated his buy recommendation on Palantir or whatever? I was kind of joking about that because it came out, I think it was on Fox or something, or he tweeted something after Michael Lee did a segment where he mentioned Palantir. So that was a little side story. Paul, your thoughts on Palantir as well, and I know you're also a fan of CrowdStrike and that kind of
Yeah.
cybersecurity type sub
So
market.
Palantir, I haven't been in for some time, but the other day it got down to 130, and I recommended it in my kind of technology sector picks for the masses newsletter. Um, it has shown me over time because I was a little bit skeptical, not just with Alex Karp, but when they started and totally being their book dominated by the spy agencies predominantly, but over the last year or so, they have done a nice job of diversifying their book into enterprises. And that looks like a really good business for them. So I like it. I just haven't liked the controversy and I haven't liked the valuation. But you know what? When it got down to 130 the other day, I think it's a buy. Now it's closed today at 146. I imagine that there'll be something probably macro geopolitical that brings it down, and I think I probably would buy it.
Sounds good. Phil, I've got to go to you on this other company because I know earlier this week all the U.S. And I think one of them was actually a British stock. The psychedelic companies all took off because Trump signed an executive order that makes it so that the FDA will speed up reviews of those types of drugs or those types of compounds. One of your recommendations or contrarian plays is Kronos in the cannabis space. Talk a little bit about that. I mean, those stocks obviously flew close to the sun and a lot of them fell apart. Where does that part of the market stand at this point?
Um, yeah, this part of the market, I was bearish on it for an incredibly long time. I gave a presentation earlier today on value traps, and I thought that pot stocks were classic value traps for a really long time. A lot of them ended up on my watch list, and I continued to watch them for a number of years. And then this one, finally, I thought this one was okay, and it made it to the top of the watch list. So the reasons it made it to the top of the watch list and eventually into the portfolio is like, unlike most of their peers, which have diluted their balance sheets a tremendous amount for very little to gain for it. In fact,
Yeah.
many of them are still losing a lot of money. This company hasn't done that, and they haven't taken out a lot of debt either because they were able to lock down a huge investment from Philip Morris years ago. And that investment essentially gave them, at the time, it was like $850 million, and that was a huge lifeline for them. So anyway, they have a structure inherent to them, almost exclusive to them, which other companies in the industry don't have. That strong balance sheet just doesn't exist by and large outside of them. In addition to that, I like that they are basically vertically integrated. Their supply
Mm.
chain is quite good in Israel and in Canada, their two major markets. So that gives them a degree of control over their supply. And then they have really good brands in the health side of things or the medical side of things, and then in the recreational side of things. And the regulations for each one of those industries are very different. And that is certainly a risk because not only are they different, but they're constantly changing, and governments all over the world have very different opinions on what to do with them, even within themselves. Regulators can have different opinions, say, between states or provinces. So that's certainly a risk on the regulatory side. But with that point aside, they are a good business operating in many markets, and they've recently expanded into the Netherlands too, which people who go to the Netherlands might know it's a recreational hub for cannabis as well. So we like them. They were one of the companies we added to in March.
Hmm.
In Canadian dollars, we added them at $3.36, and our average purchase price is $3.47. And we first bought it right out the gate in the new year. So it's still a relatively new holding for us.
Okay, and trade if you're trading in Canada, what's the ticker? And also, is there a US tracker on that?
Yeah, it's the same ticker in the US, and it's just CRON
Yeah,
for
got it.
Kronos Group.
Got it. Well, just a reminder again, we're getting to the tail end of this conversation, 5 or 6 minutes left. If you're watching this, one last chance or one last prompt, throw that question up in the chat window. We'll get to it if you can. And if I don't see anything pop up, I want to flip this discussion to the tail end. We've talked about a lot of things we would all recommend to buy. I'd like one idea, or if it's a sector, a name, something that you just absolutely don't want to kind of touch with a 10-foot pole, or you think really is a higher risk part of the market. And I guess we'll start with you, Louis, if there's anything that you'd put in that bucket.
Well, sure. I mean, in case no one's noticed, obviously Wall Street promotes a lot of new technologies that don't make money yet. And so I guess the most obvious one is the small modular reactors. I mean, they're going to be building some, but we don't know when they're going to make money. Quantum computing is a little bit more complicated. Hopefully, they'll make money by 2032, but um, it's a ways off. Okay, and there's people are paying a premium for technology that they developed, and so you have to be really careful of that. But yeah, Wall Street is always pumping something that doesn't make money yet. I'm sure when Trump releases the UFO files, then we'll find out who has the alien technology, and that'll be pumped. Okay. And it's it's just what they do to get everybody excited. You guys were talking about cannabis. I know a little bit too much about it because I grew up in Berkeley. But when we had the marijuana craze 20 years ago on Wall Street, it wasn't about the pot stocks. It was about the ETFs fleecing people on spreads. There was one pot ETF that averaged over a 20% spread. So, there would be this little pop-up on Yahoo that the pot millionaires are becoming pot billionaires, and you click on it and they get your name and they'd sell you this ETF. And you lose 20% every trade. So you have to realize that Wall Street also runs on a spread model, and they're not shy about fleecing you. In fact, that's what Paul Akin of the SEC's got to deal with now, because he's trying to get crypto going. But iShares has an Ethereum ETF that I think in the last couple of years is down about 30%, but the ETF's down over 70%. So that's like a 40% spread. And so the ETF's not following Ethereum properly. So you got to realize that Wall Street creates things for you to buy, but then they're fleecing you on the surface. I don't want people to buy, even though I have all these gold mining stocks that might all make money, I don't want people to go out and buy GLD, because there's spread risk in some of these products. So I'd rather you own the actual stock with earnings versus a derivative.
Got it. Paul, anything again, I don't know if it's officially a sell recommendation or just something that, hold whatever kind of language, or just overall take, anything that is in some of these sectors you like, particular names that are probably the least promising amongst those you follow.
Mike, I got one for you. It might be a
Sure.
little surprising. Intel. Intel has
Okay.
been all the rage recently, right? With their relationships that they've struck. Now people think that a company that could never create a semiconductor foundry is going to be successful at it. The stock is trading at 65 times earnings. And this is a company that has sucked for decades. And I am not at all convinced that they'll be able to execute, because it's going to be very, very complex to build a foundry. And even when their relatively new CEO came in a couple of years ago, one of the reasons he got the gig is he was contra to the previous CEO who started the foundry. He didn't want to be in the business.
Yeah.
And so the reason he got in the business is Trump called him to Washington, D.C., and he used to hate him, came out of that meeting. Now he loves him and, supported the company. And NVIDIA does not want to invest in Intel. They don't respect Intel, but, the federal government essentially twisted their arm. So anyway, I don't think that Intel deserves to be 65 times earnings. Until 5 minutes ago, they were a really shitty company.
Fair enough.
I agree with Paul. The reason they never built that Ohio plant is the Defense Department reneged on their commitment to spend $2.5 billion a year in chips. So that plant never got built, and then Trump was annoyed, like, why are we giving all this money to Intel for when they're not going to build anything? And then he extorted some equity from him and then told Jeff to talk to him and try to straighten him up. But they're not straightened up yet.
Yeah. Yeah, okay, fair enough. One question did come in here. We're kind of like right at the breaking point, but we can finish it off and it'd be a quick answer, maybe for you, Louis, or maybe for you, Phil. Gerard Richter wants to know if there's any value in silver or silver miners. We obviously were talking about gold miners earlier.
Silver is 3 times more volatile than gold. I do have silver miners via some gold stocks, but I don't have any pure silver miners. It's just too hot.
Okay. Phil, anything you'd add to that? Do you have any thoughts on silver or really just want to take a pass?
No, I don't have anything there. Just circling back to your next or last question, though, things that you would avoid. The private credit market is something I'm asked about quite a bit because as a contrarian, people just email me like, "Hey, are you investing in this right now?" And my answer so far has been no. I am not investing in it. I think it's fairly early stages for that, and I'm just watching and waiting to see what happens. And if there is a big problem, I think the financial system as a whole should be fine, but there could be some companies in that space that are really badly damaged and hurt.
Got it. Well, again, I appreciate all of your perspectives, a lot of tickers, a lot of names that were thrown out here, a lot of great big picture insights on tech and mining, on sort of the intersection of politics and economics. The Intel discussion was pretty interesting there for sure. So, Louis, thank you. Phil, Paul, thank you to you as well. Viewers watching this, hope you got a lot out of this. Remember, this is only the end of day one. The day two program is going to get started tomorrow morning, so we hope to see you back on the Money Show platform at that time. Gentlemen, have a wonderful day.
Thank you.